JAIIB everyone, welcome to my YouTube channel which is Explore Yourselves, Banking and General Knowledge etc. Today I will discuss about JAIIB examination related MCQs. If you are preparing for JAIIB examination or looking to strengthen your banking knowledge, you are in the right place. Welcome to part 25 of my Path to the Corner Office JAIIB examination series, where I will break down real JAIIB examination related MCQs and provide clear, practical explanations to help you strengthen concepts and progress faster in your banking career. Today's MCQ subject topic Paper 1 Indian Economy and Indian Financial System. Module C Indian Financial Architecture. Non-banking financial companies. What is a non-banking financial company? NBFC. Evolution of NBFCs in India. Role of NBFC in promoting inclusive growth of India. Regulators of NBFCs. Classification of NBFCs. Regulatory oversight by RBI on NBFCs. Types of NBFCs. Concept of owned funds and net owned funds for NBFCs. Bank finance to NBFCs. Fair practice code for NBFCs. Applicability of ombudsman schemes to NBFCs. Skill-based regulations SBR, a revised regulatory framework for NBFCs. Question. An NBFC is a company registered under Option A. Banking Regulation Act 1949. Option B. RBI Act 1934. Option C. Companies Act. Option D. SEBI Act. Correct answer is Option C. Companies Act. Question. NBFCs are primarily regulated by Option A. SEBI. Option B. RBI. Option C. IFDI. Option D. NABARD. Correct answer is Option B. RBI. Question. NBFCs differ from banks mainly because they Option A cannot lend money. Option B cannot accept demand deposits. Option C are not regulated. Option D cannot borrow funds. Correct answer is Option B cannot accept demand deposits. Question. The evolution of NBFCs in India accelerated mainly after Option A nationalization of banks. Option B 1991 economic reforms. Option C establishment of RBI. Option D introduction of GST. Correct answer is Option B 1991 economic reforms. Question. NBFCs promote inclusive growth by Option A financing large corporates only. Option B providing credit to underserved sectors. Option C printing currency. Option D managing monetary policy. Correct answer is Option B providing credit to underserved sectors. Sin. NBFCs are required to obtain a certificate of registration CR from Option A Ministry of Finance. Option B SEBI. Option C RBI. Option D Register of Companies. Correct answer is Option C RBI. Question. The minimum net owned fund requirement for NBFC is prescribed by Option A Government of India. Option B RBI. Option C SEBI. Option D Companies Act. Correct answer is Option B RBI. Question. Net owned fund refers to Option A total assets of NBFC. Option B paid up capital plus free reserves minus accumulated losses in intangible assets. Option C total borrowings. Option D profit after tax. Correct answer is Option B paid up capital plus free reserves minus accumulated losses and intangible assets. Question. Owned funds of an NBFC include Option A public deposits, Option B borrowed funds, Option C, paid up equity capital and free reserves. Option D, bank loans. Correct answer is option C, paid up equity capital and free reserves. Question. NBFCs accepting public deposits are classified as option A, NBFC ND, option B, NBFC D, option C, NBFC SI, option D, NBFC P2P. Correct answer is option B, NBFC D. Question. NBFC ND refers to option A, deposit taking NBFC, option B, non-deposit taking NBFC, option C, development NBFC, option D, district NBFC. Correct answer is option B, non-deposit taking NBFC. Question. Systemic, Systemically important NBFCs are those with asset size of option A, rupees 100 crore and above, option B, rupees 300 crore and above, option C, rupees 500 crore and above, option D, 1000 rupees 1000 crore and above. Correct answer is option C, rupees 500 crore and above. Question. Which of the following is a type of NBFC? Option A, NBFC IFC, option B, NBFC MFI, option C, NBFC factor, option D, all of the above. Correct answer is option D, all of the above. Question. Infrastructure Finance Company IFC mainly finances option A, agriculture, option B, infrastructure projects, option C, retail trade, option D, housing loans only. Correct answer is option B, infrastructure projects. Question. NBFC MFI primarily provides option A, corporate loans, option B, housing finance, option C, microfinance loans, option D, export finance. Correct answer is option C, microfinance loans. Question. Peer-to-peer lending platforms are classified as option A, NBFC-D, option B, NBFC P2P, option C, NBFC IFSC, option D, NBFC IDF. Correct answer is option B, NBFC P2P. Question. Bank finance to NBFC is permitted subject to option A, SEBI approval, option B, RBI guidelines, option C, IRDAI norms, option D, Companies Act approval. Correct answer is option B, RBI guidelines. Question. Loans by banks to NBFCs for not on lending to private sectors may qualify as option A, non-performing assets, option B, corporate loans, option C, priority sector lending, option D, infrastructure loans. Correct answer is option C, priority sector lending. Question. The Fair Practices Code for NBFCs ensures option A, profit maximization, option B, transparency and fair customer treatment, option C, expansion of NBFCs, option D, reduction of competition. Correct answer is option B, transparency and fair customer treatment. Question. The Fair Practices Code requires NBFCs to option A, disclose loan terms clearly, option B, fix uniform interest rates, option C, avoid digital lending, option D, stop recovery practices. Correct answer is option A, disclose loan terms clearly. Question. The Ombudsman scheme is applicable to option A, banks only, option B, NBFCs and banks as notified, option C, SEBI registered entities only, option D, insurance companies only. Correct answer is option B, NBFCs and banks as notified. Question. The Ombudsman scheme for NBFCs is administered by option A SEBI, option B Ministry of Finance, option C RBI, option D IRDAI. Correct answer is option C RBI. Question. Scale-based regulation (SBR) for NBFCs was introduced in option A 2015, option B 2018, option C 2021, option D 2023. Correct answer is option C 2021. Question. Under scale-based regulation (SBR), NBFCs are classified into option A 2 layers, option B 3 layers, option C 4 layers, option D 5 layers. Correct answer is option C 4 layers. Question. The four layers under SBR are option A base, middle, upper, top, option B small, medium, large, mega, option C rural, urban, national, international, option D tier 1, tier 2, tier 3 and tier 4. Correct answer is option A base, middle, upper and top. Question. NBFC upper layer entities are subject to option A light regulation, option B no regulation, option C enhanced regulatory requirements, option D state government control. Correct answer is option C enhanced regulatory requirements. Question. NBFC top layer is kept for option A newly registered NBFCs, option B NBFCs posing systemic risk, option C small NBFCs, option D microfinance NBFCs only. Correct answer is option B NBFCs posing systemic risk. Question. NBFCs cannot engage in option A hire purchase, option B leasing, option C agricultural operations as principal business, option D loan financing. Correct answer is option C agricultural operations as principal business. Question. The primary objective of regulatory oversight on NBFCs is to option A promote monopoly, option B ensure financial stability, option C reduce competition, option D increase deposit rates. Correct answer is option B ensure financial stability. Question. NBFCs contribute to the Indian economy by option A issuing currency, option B supporting credit delivery to niche segments, option C controlling inflation, option D regulating banks. Correct answer is option B supporting credit delivery to niche segments. Thank you very much for your patience. Request to like, subscribe and share.